Stop scrolling. This video is not for traders, not for gamblers, and definitely not for people chasing quick money. This video is for people who want to look back 5 years from now and say, I made the right decision when everyone else was confused. Because here is the truth most people won't tell you. The biggest money in the stock market is not made in 1 year. It's made by holding the right businesses through boring uncomfortable years. If you are thinking long term, hit like button. It helps the rich, serious investor. Reset expectations. Before we talk about the best stocks, let me be very clear. I am not giving you tips. I am not predicting prices. And I am not promising multibaggers. What I am giving you is a framework smart long term investors use globally to identify stocks that can outperform over the next 5 years. If you understand this framework, you won't need anyone's stocks tips again. Watch till the end. The last point is what most investors miss. Why 5 years is the sweet spot? 5 years is a powerful. It's long enough for businesses to grow, long enough for mistakes to be corrected, and long enough for compounding to actually work. In the short term, markets are emotional. In the long term, markets reward executions and patience. That's why institutions, pension funds, and serious investors always think in 5 to 10 years cycle. If you are tired to short term noise, comment long. Rule 1. Bet on megatrends, not news. The best long term stocks don't come from headlines. They come from global megatrends. Ask yourself this: what will people use more 5 years from now? Not less. Examples of megatrends: digital payments, artificial intelligence, cloud compounding, healthcare innovation, clean energy and electrification, defense and cyber security. Stocks aligned with the megatrends survive recession. News based stocks don't. Pause and think, which trend do you personally believe in? Rule 2. Strong businesses, not just strong story. A great story doesn't make a great stock. A great business model does. Long term winners usually have pricing power, consistent revenue growth, high margins, strong cash flow. If a company can raise price without losing customers, that's power. Over 5 years. Power beats popularity. Never buy a stock without understanding how it makes money. Rule 3. Follow where money flows. Retail investors follow YouTube. Smart money follows capital allocation. Look at where companies are investing, where governments are spending, where institutions are increasing exposure. When big money commits for years, they don't eat randomly. They do it because the future demand is visible. If you want a video on how to track smart money, let me know. Category 1. Technology enablers. Not flashy tech, essential tech. Companies that power AI, provide cloud infrastructure, build chips, networks, or platforms. These businesses don't depend one on one product. They become backbones of the digital economy. Over 5 years, backbones outperform hype. Think platforms, not apps. Category 2. Healthcare and longevity. People may cut spending on gadgets. They don't cut spending on health. Again, populations, innovations, and biotech make healthcare one of the strongest long term themes globally. The best healthcare stocks solve real problems, have strong pipelines, operate globally. Time is their biggest advantages. Long-term investors love boring consistent. Long-term investors love boring consistent. Category 3. Energy and infrastructure shift. The world is rebuilding energy systems slowly, expensively, innovatively. This includes renewable grid infrastructure, energy storage, defense and security infrastructure. These are decade-long investment, not quarterly plays. If a sector is critical for the future, demand doesn't disappear. Category 4. Consumer monopolies. Some companies sell habits, not products. Think brands people use daily, regardless of the economy. These businesses survive inflation, recover fast after crashes, compounding slowly but powerfully. They won't double overnight, but they rarely destroy wealth. Slowly, money is often the safest money. The biggest mistake long term investors make: they buy good stocks and sell them too early. Volatility is not a risk, panic is a risk. If your day is hasn't changed, price movement shouldn't scare you. Over 5 years, patience beats timing. If you can't hold for 5 years, don't buy for 5 minutes. How to build a 5 years portfolio? Keep it simple. 6 to 10 high quality stocks across 3 to 4 future focused sectors, reviewed once or twice a year. You don't need constant action. You need conviction plus discipline. Consistency builds wealth, noise destroys it. 5 years from now, today fear won't matter. Today's patience will. The market The market rewards those who think longer than others and act calmer than others. That's how real wealth is built. If this helped you think long term, subscribe. This channel is for serious investors only.